Hi, I'm Jon Najarian of the Investitute, and I'd like to welcome you to another one of Ron's Rants. When you're teaching people how to trade options and you're teaching them technical analysis, you're teaching them all these things, quite often you have to step back and take a look at how the students are performing, what they're doing and how they're doing to kind of actually rate yourself as a teacher. Obviously, if they're having success and they're doing well consistently, you rate yourself pretty well. Maybe there's not many changes you make. But every once in a while, even if you are teaching well and the students are, by and large, doing very well, there comes a little time where you've got to go back and question either what you're doing or what the students are doing. And I think it's very important to do that. Case in point, I'd say 3 weeks ago, we had a little run for about 2-3 weeks, to be honest. I mean, it's not going on anymore because the NASDAQ has lost its momentum. But we had a nice little run in LPP, our Lighthouse Point Platinum service. It's a newsletter. And we had a lot of different potential opportunities. And over the course of those 2-3 weeks, almost every one of them was hitting big. I'm not talking about like the stock would move a couple dollars in the right direction and bango, you got a 35%, 40% return in a couple days. I'm talking about stuff that really actually flew. And I figured that the students, based upon how they had performed before, I figured that our students, our subscribers in there had done pretty well. And for the most part, I was right. I actually asked them during a webinar, hey, who had a real good week the last 2 weeks? Or who had a great last 2 weeks? But I noticed there were some people that didn't say anything. So I started asking them, hey, why didn't you have a great week the last 2 weeks? And it was very interesting, but I got the same answer from each of those students that didn't seem to do at least very well to great. They told me they did okay. And you know what the answer was? With the market up this high, with the type of run we've had since the election, I just don't want to be caught being long something. And I realized right at that moment that they had broken one of Ron's very important trading Ronisms. And that is, well, first, let me tell you what a Ronism is. It's kind of like a little small saying that I come up with to kind of give a guideline or a rule. Something equivalent to buy low, sell high. Don't fight the tape. And this Ronism is a very simple one, but I found that every one of these students that didn't do great, that were all afraid of where the market was, and thus ignored any up trading opportunities, that's where they all messed up. And let me give you the Ronism. We trade the market. We hedge our opinion. Let me say that again. We trade the market. We hedge our opinion. What that means is that whatever the market's doing, you have to go along with it. It doesn't matter what you think. To be quite honest, nobody cares what you think, and what you think is meaningless. If the market is going up, you gotta be long to make money. If the market's going down, you've got to be short to make money. It doesn't matter what the hell you think, because in the market, you are nobody. Your opinion is meaningless. It's worthless. The market doesn't care what you think. Hell, the market doesn't care what I think. The market doesn't even care what John or Pete thinks. The market is the market, and it's way bigger than all of us put together times about 1,000,000. So what you've got to understand is when you're trading, especially short term, because LPP is a short term swing trading system based on breakouts and breakdowns. When you're trading those 2, 3 day, 5 day type of trades, you've got to go with the market. And if the market is up, then you trade the bullish side of things when your trigger goes off. When a resistance gets broken, you jump in and you buy. It doesn't matter that you think the market is overpriced, because your opinion doesn't matter to the market. Now, once you're in the trade and you're not believing in the overall market, are there adjustments you can make to protect yourself? Even adjustments above and beyond normal adjustments you would have to protect yourself. Well, of course there is. You could play a shorter run. What I mean by that is, if the stock breaks resistance at 100 and you see that the next resistance is around 108, when it gets to 105 and you have a nice profit, you can just get out. Or when it gets to 108 and looks like it's going to go further, you can always just go ahead and, instead of rolling like we do often, just get out. You could buy a put for protection. There's a lot of things you can do that you don't normally do. But the fact of the matter is you've got to make the trade. People let their opinions affect their judgment. They stopped trading and became quants or philosophers or whatever. They stopped being traders. They quit playing the percentages. They quit playing the odds. And we know that when the market is up, regardless of how high it's already been up, if the market's up and the stock breaks through resistance, we probably have a breakout. It doesn't matter that you think the stock is overpriced. It doesn't matter that you think, oh, well, the market could turn and, there's a lot more downside potential. Fine, then hedge the opinion. But you've got to make the long trade. And what wound up happening was many of the students, because their overall opinion was that the market's run enough, it's run too far, as a matter of fact. I'm afraid of the upside. Well, fine, be afraid of the upside. Hedge it off. Hedge your opinion. But for Christ's sakes, be long the doggone opportunity. Buy the stock and play the breakout. Those people who didn't let their opinion become a fearful thing got long, played these things, and made a heck of a lot of money during those 2-3 weeks. Because they traded the market. They didn't trade their opinion. Don't trade your opinion, because your opinion is meaningless. Trade the market. Hedge your opinion. And if you can learn to do this, you're going to be a heck of a lot better trader really, really quickly. Now, I've got a bunch of other Ronisms for trading, and I'll probably go ahead and introduce them to you through here, through Ron's Rant, when they're applicable. But today's lesson is that you trade the market. You hedge your opinion.